Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at a trade setup I was talking about in our MTPredictor training webinar yesterday, which is what I nickname our VS, or our volume spike. It's basically where, where the market makes a move beyond a prior important psychological pivot on a high volume spike and then reverses at our DP support. Why is this such a good trade? Well, it's because it gets you in the direction of the professional buying or selling, and as such you normally get a strong move as the professionals move the market. So let's have a good example that's unfolded this morning on the DAX. And I just want to show you what I'm looking for. I'm just going to use our chart training mode and jump back to about here somewhere. Right, so what are we looking for? Basically we're looking for a prior important pivot that all amateur traders would look at. And for example, there's the low of the day so far, which is back here at this pivot low. So I just want to put a low tag on that and have a look at this and see what happens, or see what amateur traders would do if the market went through this low here. But before I do that, I want to put our DP support zone on the chart as well, because remember, our DP support zones, or support and resistance zones, are leading. In other words, they're on the chart in advance. So if I right mouse click over this pivot, place DP, can you see how we at MTPredictor have a potential support zone just below this 3150 or 31.5 pivot low which was there. So let's go forward and see what happens. Nothing there, nothing there, and then suddenly the market makes a dive through this new low. Amateur traders would look at this and say, we've got an increase in the volume. If I scroll in a bit, can you see how the volume's increased here? They're thinking, high volume, break below an important pivot low. That looks like it's a breakout. We want to go short. However, at MTPredictor we have a huge advantage in that we have our DP support zone here, and this is an area where the markets very often make reversals. So we know that markets made a high volume move into our support zone. This is indicated by this red color coded on our volume indicator down here. Remember, we don't look at all the red ones, we're only looking at a red one where the market has made a push beyond a psychological important pivot. What happens the next bar is vital, because if the next bar carries on down, it means that the volume in this bar here is truly selling. In other words, the market is going to make a breakout and carry on. So we look to the next bar, and then suddenly can you see how we've now got a blue buy bar? This is an MT-predicted color reversal bar that's failed to follow through. In other words, the market has failed to move to new lows. So that means that the volume in the previous bar that I was discussing a minute ago is actually professional buying. It's not selling as the amateurs in this particular case we're looking at. It's professionals stepping in and looking to go long. So that's all well and good. Here we have a setup that we think that the market is making a pivot low. We think professionals are coming in and going to move the market. Of course, what we need now is we need a trade setup. Now, as we know, trading is all well and good, but you have to keep your losses small and have targets that are, or where your profits are greater than your losses. So how can you do that? Well, for this we go back to our last pivot. We place the DP on here, and this gives you a target. We then use our risk reward tool. Very easy. One click above the buy, the high of the buy bar. One click on the low bar. Then we click and drag up to our target. And suddenly we have additional information here. So we're not only looking at this as a potential reversal. We know that where the support is coming in. So we know that if the reversal is to hold, we have a logical place where we can place our stop level. We have a buy trigger, so we have a logical place where we can place our entry level. So we know our stop, we know our entry. This keeps our initial risk small. We use position sizing to keep our initial risk small and under control. Vary the number of lots, contracts or shares to keep your initial risk small, in this case less than 2% of a sample $20,000 account. Maybe if you're trading the DAX, maybe you have a euro account, and here again you can use the position sizing in euros. So let's just leave it in euros for you guys who are in Europe. We then have the advantage that we actually have a target. So what's important about this? Well, if the market gets up to this level, it means the profit is 5.9R or 5.9, can I call it 6? Is it close enough? approximately 6 times greater than the initial risk. This is important because over time, if you only get half these trades right, each time you make a loss, you'll only lose 1 risk unit. Each time you make a profit, the profit is large, and that's what moves your account forward. So can you see how at MTPredictor we suddenly have a lot more information available that allows you to build a good trade setup in and around this high volume VS spike here. Let's turn training mode off and see what the market did. Well, the market rallied up nicely, hit that target there very nicely indeed, so there was your 5.9 hour profit that was available. If I look at our STF, remember we don't use this STF for our color-coded trend. We use our DPs, and I'll just show you what the large degree trend would have been as the market was going up there, because I know you can see there was potentially failed sell signals on the way up there, so I want to show you what the large degree trend is in a minute, but I just want to finish off on the trade management of this VS setup. So remember we were long here from 33, our stop trigger was at 21.50, 21.5, our target was at 00.50. Market got up to here, the STF was strong, in other words beyond our strength barrier, strength line there, our grey line, so you could move to the ATR stop, which is our red and blue dots, our blue dots there, so you could have actually trailed it a little bit higher to increase your profit to 6.4R. So that was the basis of the VS setup. In other words, we're looking for a break to new highs or lows, but beyond an important psychological pivot. We're looking for the reversal at our DP support or resistance zones. We're looking for the reversal to happen 1 bar after the break to new highs or lows. We're then looking to create a trade setup using our DP as a target from the prior swing high or low, and then use our risk reward tool to create our trade setup there, keeping our initial risk small under control. A great manual trade setup in MTPredictor where you gets you in the direction of the professional money. Let's just clear all that off, and I just want to go to the 15-minute chart, because remember we use the higher time frame charts for our large degree support and resistance. So even before that VS setup would have unfolded, you'd have had a DP off the prior 15-minute low, which was there. That would have given you your DP support. As the market started to rally up, here's our DP target, the initial target there. The next target would probably have been back here. That would have been your second target there. So the large degree trend would have been up from this low up into at least this 15-minute DP. Let's see how this looks on the 3-minute chart. And there you are. There's your support coming in your 15-minute DP, which we've seen already off that low. But the important point is the large degree trend would have been up into at least this 15-minute DP. So can you see now how these sell signals would have been against a large degree uptrend, and you wouldn't have wanted to take them anyway. The market went through this prior pivot high here, made a 5-wave sequence. Whoops, I'll just clear that off. I meant to hit that pivot high there. Made a 5-wave sequence up there, but look where the 5-wave sequence ended, right at our next 15-minute DP resistance zone. Our isolation approach to Elliott wave suggests that after a completed 5-wave sequence, the market will go back to at least the DP from the prior wave 4, which is exactly what happened and where the market's unfolding at this very second now. But that's just beside the some additional analysis beside the point. But that's what I wanted to show here, in that the large degree trend of this low here, there's your higher time frame support, there's your move up into at least your next 15-minute resistance, and it went on to the next one there. But the point being is that our VS setup, which we had initially here, came in at not only DP support off that initial low, but also was at a higher time frame 15-minute support. Large degree trend was up into that next DP, which is our target, and there was our profit from it for at least 5.9R, which we then used the ATR stop because the STF was strong beyond our strength band to then manage up into here for a potential 6.4R profit. So a very good example of what we're looking for our VS setup, or a volume spike setup in MTPredictor.